Hong Kong is leading the losses this morning.
On the Nifty, on the way up, the upper end of the daily Bollinger Band stands at 19,633.
Here's the first tick on the index, up about 30 odd points, so that's not bad actually. A very good start for the mid caps, by the way.
There's been two markets actually, right? So large caps have been mostly range bound and the mid caps have been tearing away.
Now companies are getting orders on a competitively bid basis, so margins might be slightly lower.
Disparity prevails when we're talking of technology. Digital literacy is a huge big indicator.
It's a very good-looking screen in the broader markets. The mid-cap index, small-cap index, all of them surging.
Anticipation was that it will be about 227 to 28 gigawatt, but this year the demand increase has been very high.
It was well planned by all of us during the beginning of the year that this year the second quarter will be weaker than the normal quarters.
This is important news coming in, and there was first speculation about this because the invitation that has gone from the President's house, from President Murmu to all heads of state of G20 countries, ministers, chief ministers from India, that has gone with the heading President of Bharat.
PE firm Bain has approached Dr. Reddy's to explore a joint bid for Cipla's promoter stake.
For the markets, they've come up sharply from the highs. The Nifty is down 40 points or 45 points from the day's high.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. With me, I'm Rima Tendulkar, and with me are Surbhi Upadhyay and Nigel D'Souza. Well, it's still a good-looking screen, right?
Yeah. It's a good-looking screen, whether India or Bharat. The point is that mid-caps are flying away and there's money being made in this market.
No, absolutely. Look at the small-cap index, right? About 2 hours back, there was a decline in the small-cap index, and maybe you thought that that exuberance was tempering. But that dip has been bought into if you pull up the small-cap index, and once again, it's back up with a gain of close to about 1%. So even at these levels, all the dips in the broader markets are being bought into. The mid-cap index is holding on to its gains of close to about 1%. The Nifty is still above 19,550. It's a slim gain of close to about 0.1, 0.2%. But, considering that we've had 2 good days on the trot behind us, we're going to take that. And again, even on the Nifty, at one point of time, we'd practically flattened out, and now we've seen some buying. IT continues to do quite well. You've got, strength in a couple of these pharma names like Apollo Hospital, Sun Pharma, Bajaj Auto has been a big mover. I think the only point of concern has been the banking index. With names like HDFC Bank, SBI, ICICI Bank in the red now.
Well, that's right. And I think the final 60 minutes, I'll be looking at the Nifty Financial Services Index because that's been doing a thing of its own. The low of the day is around 19,710. The high of the day is around 19,820 approximately. So the Nifty Financial Services Index, that's the one we'll keep an eye out for the last 60 minutes because that's the one that plays out expiry as well. So pull up the Nifty Financial Services Index. Yes, it's pat in the middle of that range. Closer to the lower end now as we speak. So expect volatility to pick up on that particular index. And talking about stocks that are moving around, VIP Industries, in the last 10 minutes or so, that one has seen a sharp spike and there's a big volume spurt. So plenty of stocks in the mid and small cap indices that are just moving around and doing a thing of their own. So what else?
Oh yeah, if I start adding to Nigel's list, we could go on for a longish bit, right?
We may have to be here till tomorrow.
Exactly. The kind of momentum that we're seeing in the mid-cap market, it's absolutely astonishing. It's been there right from the morning, no dithering, and so many names coming up. Look at some of these. We're talking about banks underperforming on the large cap screen. Yeah. But look at tier 2, tier 3 banks, if I could call it that. IDBI Bank, of course, there's a fair amount of news flow and all kinds of possibilities around that one. But still 7% up. Look at UCO Bank, look at Bank of India, look at Central Bank of India. So traders are having a field day on a lot of these names on the PSU side. So that's one very active part of the market. Then specific names from mid-cap IT are doing very well. There is Cyient, which is up about 7% as we speak. Tanla Platforms has been attracting a lot of buyers today. A lot of pockets, 6-7% now on Tanla. As we can see it from now, and yesterday's mover IRFC, Indian Railway Finance Corporation, no stopping that stock. It's up another 7.5% even as we speak. So short point, mid-cap market, small-cap market is on fire. That is the SEBI chairman speaking at the big financial services sector event. Let's listen in to what she has to say.
Designed accordingly. So, for instance, we have recently announced that we are going to have a regulation called Mutual Fund Lite. LITE, which means that the entire rule book which governs mutual funds will be down to 10% because certain kinds of business which mutual funds do, like for instance passive investment, do not need the whole rule book at all. So a segmented approach is something that we had already moved into, but what artificial intelligence will allow us to do is to actually differentiate between the good apple and the bad apple at a much more granular level. And therefore, we believe this will allow us to take regulation to a level where the risk management will be almost custom fit for the entity. So it will become a situation where if the entity has really managed its risk well and has demonstrated all the parameters of being a good apple, then the level of regulation that will apply, the level of supervision that will apply, and so many other things that would apply would automatically be of a lower level. So this move of risk-based supervision to risk-based regulation to segmented regulation to now very granular level regulation is something which we see that artificial intelligence will have the potential to give us that ability to do that and therefore make life a lot easier for all regulated entities. But even more importantly, I think that the biggest opportunity that fintechs today have in the markets is that over the years, the regulator has focused on, and that has been its principal mode of regulation, is disclosure-based regulation. And we know that internally within SEBI, we were at times questioning ourselves that have we made disclosure reach a level where it has become information overload? Has it reached a level where people now actually cannot make out what they are supposed to make out of the disclosure? This was a thought that was worrying us. But now, as we see the way that artificial intelligence is evolving, we believe that whether it is in the space of disclosures made by listed companies or by mutual funds or by PMS managers or investment managers, anybody in our domain, those disclosures, if artificial intelligence is applied on them, this can become the tool for giving very, very high quality input and advice to possibly every citizen of the country at a very, very granular level. This is the potential that we believed that artificial intelligence and fintechs can leverage. Today, we have at SEBI already declared that data in the markets is a public good. It is infrastructure. It will be owned by the citizens of the country. So every piece of data that is mandated for disclosure by the regulator is available free of cost, conveniently downloadable with archives, and that is the mandate and the commitment that SEBI has made. I think we're about 70-80% of the way there. The balance 20% is in the works, and most of this is now being pushed in the form of being sure that it is machine readable, XBRL filings, etc., etc. And so the dream is, and that is what I would invite each one of the participants in this FinTech conference to really think about, that the big opportunity now is that what people consider an information overload in terms of market disclosures that the regulator mandates is actually a gold mine waiting to be analyzed, interpreted, insights to be taken, and then to be monetized by way of giving high-quality advice to a vast, vast variety of citizens in our country that need that advice.
All right, that is the SEBI chairperson talking about the future of regulation, really, considering that AI and machine learning are changing so much around us. So why not regulation? She's saying that it is these technologies that will help us to move to risk-based regulation, very granular level disclosure, and maybe do away with a lot of this information super overload that we have, considering all the disclosures which are required out there. We'll keep listening in and keep going back to that conversation as more comments are made. But for the time being, let's go back to the market. We have Mitesh joining in. How do you negotiate the last 1 hour? Mitesh, good afternoon. Good to have you on as usual. So you tell us what's the approach you are taking to the index and what about individual stock trades?
So, on the index, we've been maintaining long bias and, I've advocated that all intraday dips should be bought into. There is a marginal pivot around this level of 19,570 and we've been hovering around that. I think we'll clear that in a day or two and head towards 19,680, 700 zone. So maintain long bias and till 19,430, 19,400 zone doesn't give away. Use all declines closer to it as buying opportunities. On the stock side, I have a buy on Sun Pharma. That's reversed very well after a good correction in the last few days. So that's a buy with a stop at 11.15 for targets of 11.60. And UBL is a buy as well. Here I would recommend buying with a stop just below levels of 15.55 for targets of 16.10.
Okay, all right, Mitesh, thanks a lot for that. Let's welcome our fundamental guest as well on the show, to help us out with some quick analysis. Deepan Mehta joins us on the show. Well, Deepan, wanted to track a couple of companies with you. First up, let's run our viewers through the news. We're looking at Sandur Manganese and, on the exchange filing, they have said that they've received approval from the Karnataka State Pollution Board for expansion. The iron ore capacity earlier was around 1.6 million tons. They've got an approval to go to around 4.5 million tons odd. So that's why intraday we did see a spike on the stock. If you pull up the intraday chart of Sandur Manganese. But we're not just tracking this company, we're also looking at the NMDC stock. Why is that? Because it's applied to the same body to increase capacity from around 7 million tons at their Kumaraswamy mine to around 10 million tons odd. Since it's located in the same belt, well, the street is a little bit optimistic that approval as well will come through. And that's why if you look at it, from the time this Sandur Manganese release came, you've seen that NMDC as well, that was trading more or less flattish. That's moved to the high point of the day. So maybe we get the intraday chart of both those two stocks up for our viewers on the screen. Deepan, I know you've not been too fond of metals, but that's been the outperformer. Any view on NMDC from here on, Sandur Manganese if you track it, or any other metal stock that you like?
Yeah, Nigel, good afternoon and thank you for having me on your show. So basically, you see, metals have these rallies from time to time because of positive news flow, prices going up, such mining rights being awarded, approvals coming through. So it is natural that they will have some positive news flow, negative news flow. My only problem with metals and mining is the track record in terms of building wealth for investors, especially PSU metal companies, the likes of SAIL, NMDC, even Sandur Manganese. The track record in terms of wealth creation has not been all that great. But it's quite heartening to note that both these companies are looking at expanding capacities and they have a ready market for their produce, considering where they are situated and the kind of steel expansion capacity taking place within the country as well. So even if prices remain subdued, I think next 2-3 years, we may see volume growth for both NMDC and Sandur Manganese to drive the earnings for the companies. Valuations are extremely attractive, high dividend yields as well. So from a trading perspective, I think next 2-3 quarters could be exceptionally good for both these companies.
Deepan, in this two-horse race for Cipla between Dr. Reddy's and Torrent Pharma, which one do you think is best suited for this bride? Torrent Pharma for the last two, initially, when the news came out and Torrent Pharma was the only strategic player interested in Cipla, the stock reacted negatively. But now over the last 2 days, it looks like the street believes Torrent Pharma can digest a very large acquisition. So your thoughts on Torrent Pharma, if they do buy it, or Dr. Reddy's, which is under pressure post this news? Or would you go with Cipla?
I think, first of all, the disclosure, we and our clients are invested in Cipla, and it is great that it is getting so much of attention and attracting such marquee names in terms of investment. And one really needs to see the contours of this deal because it's really a big company. And then the acquirer will have to make an open offer as well. So whether Torrent and Dr. Reddy are doing it by themselves and using the listed company funds, or whether they're going to use private equity, I think many things are still not been known to the market as well. But from Cipla's perspective and as a shareholder of Cipla, I think it is great news. And if you go back into the history of all the mergers and acquisitions which have taken place within the pharma space, with the exception of Sun Pharma's acquisition of Ranbaxy, all of these acquisitions have been extremely value accretive to the acquirer company, right from the days of Abbott when they took over Piramal Enterprises' pharma business as well. So I think I'm quite excited that whichever company wins Cipla as well, I think over a period of time, they'll be able to extract even higher value than what they have paid for the company. So from that point of view, very positive on Cipla, and I would have an open view on any of the new acquirers as well.
Okay, all right. Deepan, I want to ask you about Jio Financial Services, but this is because of a technical factor. You know, we're covering the stock, and then I would like your view at current reckoning. Now, we need to watch out for the exchange notice or a release coming in from the NSE later today, which could potentially state that Jio Financial Services will be excluded from the Nifty, by Thursday itself. Just to give you a quick background, Jio Financial Services, that's a financial services arm of Reliance Industries. The spun-off happened on July 20th. The stock started trading on August 21st. Now, from the time that spin-off did take place, we have had 51 stocks in the Nifty 50. However, it does sound, But what is the rule to exit the Nifty? Well, for 2 consecutive days, the spun-off entity needs to not hit circuit. That's the 5% circuit that was prevalent in the last week, either the upper or the lower circuit. Now, why is the probability higher this week that it doesn't hit circuit? Because the circuit limit was flexed from around 5% to around 20%. It came out of T2T yesterday, and that's why, in fact, the probability of it hitting the 20% is unlikely, and we have just got the remaining 50 minutes or so. So, that's why the probability of getting that announcement this evening is almost a given. We should be watching out for that announcement. Can it make a comeback into the Nifty? Yes, it can, because the free float market cap is so large, but it first needs to be included in the F&O market, and then it can make its way back into the Nifty. So just to give you a quick time frame, this evening we watch for the exclusion notice. Tomorrow we'll see the adjustment because the passive funds will have to sell this particular share. So tomorrow in the final hour of trade, we could see some selling. And come Thursday, it'll be excluded from the Nifty itself. Well, Deepan, that's about the technical factor. Jio Financial Services holding at around 255 rupees odd. What's your view on the stock?
See, Nigel, at present, anybody buying Jio Financial, basically, you are buying the Reliance management, you're buying their aggression, their super execution skills. Because as such, the business model and the actual loan book has to still evolve. And most importantly, they need to get their manpower resources in place because it is a highly HR-intensive, people-driven business as well. Of course, they will use a lot of technology in trying to grow their loan book and offer many other financial products. But nonetheless, I think there are many moving parts, and hopefully the execution will be the most important factor to consider over here. Now, if you take a 3 to 5 year type of a view, then certainly I think Jio Financial should do exceedingly well, considering the kind of business it is in and the kind of runway available for growth and the actual financial and resources available of the Reliance Group, which will drive this particular entity. So from a 3 to 5 year view, I think you cannot go wrong in Jio Financial. It's just that the stock at present is reasonably, I would say, slightly richly valued. And when it comes to actual declaration of quarterly results, maybe from September or December onwards, there may be mild disappointment because it takes time to scale up these businesses. But long-term potential is fantastic.
Okay, another stock which is doing very well is Nazara Tech. In fact, even yesterday, the stock was up 8-9%. It's followed it up with a 7.5% up move. And now the stock price is very close to 900. With this, it's still below its IPO price. The IPO price was 1,100 rupees for Nazara Tech. It had a blockbuster listing. It went on to hit high levels of 1,678. 1,678 was the all-time high on Nazara Tech. But after that, the stock came under pressure. But again, in the last 2 days, the stock has seen a lot of buying. Deepan, it's got the endorsement from Nikhil Kamath and his firm. So that's one. But the company is looking to raise some more money by issuing equity under the preferential route. They've held a board meeting on the 7th, that's Thursday. Do you see the stock getting re-rated further?
No, Rima. I think there's a lot of fancy around Nazara because it's the only listed gaming company. But look at the track record since it has got listed. I mean, when you talk about gaming and such businesses, you would expect the company to grow by 40-50% year-on-year growth rates. But Nazara has nowhere delivered those type of growth rates for the past several quarters or so. And their business model is focused on too many smaller games in smaller geography. They not have one single blockbuster which can drive the growth to higher levels. A lot of the geographies and the games they're operating have reached maturity as well. So I think considering the valuation, And considering the recent track record of the company, I'm not looking at buying Nazara at these levels, although I have been a shareholder since its listing and I've seen dwindling of value of the company in my portfolio. But wouldn't certainly advise buying Nazara at these levels. It's all right that it's a fantastic industry, great growth prospects, and month on month, quarter on quarter, the user base is growing. But then why isn't Nazara growing at 40-50%, year on year? That's the big question I'd like to ask the management actually.
In fact, if you look at the reported growth rates, it is higher than that. Last year was 75%. The year before that, it was 37%. The year prior to that was 83%. The only thing is they've done so many acquisitions and partnerships, you don't know what the incremental contribution or how much of that reported revenue is courtesy M&A and not the organic growth, which according to you should be growing at least 35-40%. So, we don't have those numbers and the management doesn't provide it. But reported numbers have been growing pretty well thanks to M&A.
Well, that is Nazara Tech, quite the headline maker in the last couple of days. We will take a break on that note with the news that the Nifty is completely flat. It continues to be an out-and-out mid-cap day with that index flying away 1%. Break. We come back and we also get chatting with our alpha manager of the day, Sanjay Parekh of Sohum Asset Managers will be with us.
Welcome back. The stock of the day today is Raymond. It's surging in trade. We've got bullish calls coming in from Jefferies and Motilal Oswal, and I think both of them have put a target price of 2,600 rupees. Surabhi is here with the details on what makes these brokerages so bullish on Raymond. Surabhi.
Thanks so much for that. So Raymond is surging in trade today. There are two initiating coverages by Jefferies and Motilal Oswal. Both have a target price of 2,600 on that stock. Now Jefferies says that through concentrated efforts, Raymond has addressed past investor concerns on debt and the corporate structure. The company is already net cash positive and is going to list the lifestyle and the real estate business separately in the next 12 months. So that's a growth driver. Apart from that, the growth focus is visible across businesses led by category expansion, market share gains and premiumization. They expect Raymond's revenues and earnings to grow at 13% and 24% respectively over the next 3 fiscals. We also spoke with the management, so let's listen in.
So there is a very strong expectation that second half of the year, the weddings are going to be very good. People have not spent money for almost 7, 8, 10 months. So there is a lot of spending which is waiting to happen. We are targeting a significant growth in the numbers of ethnics because it is just the starting. We are putting a capex outlay on the entire technology investments in the lifestyle business to the tune of 85 to 100 crores over the next 3-year period.
Okay, that's Raymond. Quite the stock of the day with the way the brokerage commentary has turned extremely positive. Before we ask Deepan about Raymond, take a look at what's happening on a couple of these metal and commodity stocks. Complete U-turn and a big spike is coming in. They were taking it easy in the first half of the day. I'm talking about JSW Steel, Tata Steel, Hindalco. But suddenly there's a complete reversal on these stocks and metals are shining bright once again. It was the theme of the market yesterday. This morning, there was some profit taking, but look at those sharp moves that are coming in on a lot of these names, including Coal India, by the way. Coal India, obviously, in the headlines because of all this talk of the peak power demand hitting 240 gigawatts, whatnot. And Coal India also on the buyer's radar. So those are some of the interesting moves that we're seeing today. But for the time being, just to get back to Raymond, Deepan, you tell us, I mean, the brokerage commentary suddenly turned very optimistic after, I think, these management meetings that happened. What's your sense? Do you think the worst is behind? The stock has also rallied quite a bit. So what would you be doing?
Yeah, you're right. I think, Surbhi, the stock has been a multi-bagger and a lot of the concerns have been gradually reducing as far as Raymond is concerned. And especially listing of the real estate, I think, will unlock value because they have prime property in Thane. And I don't think that is completely captured in the present market capitalization. So I think sum of parts is higher than what is present market cap plus debt is. The only issue with Raymond has been that in the consistency when it comes to their retail business or the consumer-oriented businesses, those have not really performed up to the street expectations. And having followed Raymond for many decades, I feel it's a company which has not grown to its true potential, but that can certainly change from this point on. And I think all the right steps management is taking to grow those businesses and simplifying the capital structure. I think that will be a big trigger, or rather is a big trigger for the stock price to move up. Of course, it's run up significantly last few months or so, but maybe at a correction, I think one could still look at buying into Raymond.
Okay, all right. Thanks for that, Deepan. Well, let's discuss one more stock. Railway stocks have seen a good run-up since the beginning of the year, and IRFC is one such stock on our radar. Hormuz joins us to fill us in about the recent rally the NBFC has seen. Hormuz, tell us more.
Well, it's kind of baffling, right? For a stock that barely moved in 2 years since it listed, has suddenly leapfrogged all of its peers and now has the highest market cap in the entire group, and that is IRFC. Now, the stock is up almost 50% in the last 3 sessions. It's almost tripled from the lows that it had in March this year, which incidentally also happens to be its IPO price. And at the day's high, its market cap was almost 98,000 crore rupees. Now, why the emphasis on the market cap? Now, the table that comes up on your screen will show you that as of the 31st of March, the most valued railway stock was IRCTC. It had a market cap of around 45,000 crores. Now, why March 31st is because around the same time, the market had also made its bottom for the year and then it moved higher. But if you see this next column, you would see that IRFC now has a market cap of over 95,000 crores, while IRCTC is still at 56,000, and Concor has barely moved because it is negative on a year-to-date basis. Now, when IRFC had listed in January of 2021, it had a market cap of around 32,000 crores. Now, when I say that it barely moved, here's proof of that. From 32,000 crores, it took 451 sessions to hit the 40,000 crore market cap mark. Now, it took another 170 sessions to go to 50,000 crores. But what after that? Well, 4 sessions to 60,000, another 17 to 70,000. It crossed 80,000 yesterday and it crossed 90,000 today. Now, what is the next level that we are watching out for? Well, the next level is 77 rupees. Well, that is the level at which IRFC's market cap will cross the 1 lakh crore rupee mark. So we'll keep an eye out on that one. But despite this almost eye-popping rally, the stock does not have any analyst coverage, and more importantly, the government, which also has 86% stake in the company. Now that stake is valued at almost over 80,000 crore rupees. Now IRFC, well, it still acts as a shadow bank for the railways, but its shareholders, for now, whatever little they are definitely laughing their way to the bank for sure.
You put that well, Orbaz. Thanks very much. Well, while the going is good, I don't think any shareholder complains, and that's how it has been for IRFC. But Deepan, what do you make of it? I mean, this is a gravity-defying move, the pace of it, the rise. Railway stocks in general are going through the roof. What do you think is happening here, and what advice would you put out?
See, IRFC per se is an extremely low-cost NBFC, and actually it's a bit of a no-brainer because it basically raises resources from the government and it lends to the railways, or rather leases to the railways. So there's actually no credit risk as far as IRFC is concerned, and we're surprised that the total strength of its employees, I think, is less than 100 or so. And the stock had been languishing because the performance had been pretty much stagnant, but I think last few quarters it may have improved over there. But I think this rally is purely on account of a re-rating of its price to book or price to earnings multiple, and extremely low floating stock also has a role to play in it. And typically when stocks start to move up the way they are, a lot of traders also get into the action over there, which is what is happening in IRFC. On a fundamental basis, I think it's pretty much reasonably valued at these levels. But as I said, I think low floating stock, who knows what can happen to the stock price.
Is there a risk of an FPO?
Of course, an FPO is always possible in all PSU stocks, especially government also has an eye on all its holdings. And whenever they feel the time is right and they can unlock some value for themselves, they certainly will go for an FPO. And I'm pretty certain the same thing will play out in IRFC as well. Wherever there's retail frenzy or fancy for PSU stocks, the government of India is always there to provide the liquidity.
Deepan, thank you very much for joining in. Enjoy the rest of your day. Let's also invite Sanjay Parekh, founder and chief investment officer at Soham Asset Managers, on the show. Sanjay, afternoon. This is Reema here. I remember in the previous interaction that we had, you'd indicated your tilt was more towards large cap in the India Opportunities Fund. I think 3/4 of your percentage holding was in large caps, and in high single digits was the exposure to small caps and about 10-12% to mid caps. Now, considering the kind of rally that we've seen in the mid and in the small cap space, would you look to tilt your asset allocation in any way?
Yeah, no, good afternoon, Reema. So essentially, we look at mid and small cap on a bottom-up basis. And the ideal conversation we have when we evaluate a mid and small cap is, can it double in 3 years? If not, at least in 4 years. And of course, we would have a filtering criteria in terms of quality of business, promoter comfort, the business character, and the most important being valuation. So, as the markets are moving up on mid and small cap, there is some element of euphoria, and you obviously don't get those, attractive bets that you want the right valuation. So we have on our radar 50, 55 businesses, but the most important criteria of attractive valuation is missing in a lot of them. So we do look, search hard for it, but there are few plays as of now. Having said that, always there's an opportunity. I mean, we are positive and bullish on India. You could have small reactions, but on the ground, when we meet companies, there's tremendous amount of activity on the manufacturing side, on industrial side. The ancillaries would be supporting to those investments. So you need to search hard without compromising that filter and look for opportunities. That's our approach that we have right.
So, Sanjay, hi, good afternoon. Looking for opportunities on manufacturing among other sectors. That's interesting, right? Because that's where we've already seen a lot of excitement, enthusiasm, a run-up in stock prices as well. So could you narrow that down further for us? I mean, how are you dissecting the opportunity? What kind of companies, what sectors, and what are the filters that you're now putting in place? Because there is already a huge run-up in prices.
Yeah, so, but I'll tell you, let's say an ancillary company, auto ancillary company, which we own, uh, again, leading player in a global space, Samadhan Motherson, again, there's still, we believe, can have a huge opportunity. It is dependent on the global sales of vehicles, but it's an extremely dominant player, increasing its market share, doing acquisitions. So this is one area. Second is logistics. Again, we like that space. Then some of the ancillaries. So we have we have clear bet on the leading power player who is transiting from thermal power to renewable, JSW Energy. And then a lot of ancillaries. So it could be a power ancillary. It could be an EPC player who is supplying to power. So you certainly, there will be opportunities. The whole new hydrogen that we see, who are the players who would be supplying to them? In the recent conference, we just met some of them, who would be a big beneficiary of this. Some of them who are contractors to the real estate space. So there are opportunities, just that, you certainly have to avoid where there are working capital guzzlers. They don't effectively manage their working capital and yet grow profitably, and the right comfort that you have on management. So there are companies, as I said, you just have to dig hard and look for it on a bottom-up basis.
Hi, Sanjay. I was just looking at your portfolio performance and you've outperformed the market. So kudos to you on that front. But, a couple of sectors that I was looking at in the construction materials, some of those cement names, we have been discussing that on the channel itself, and things are looking up.
Yes.
You are relatively, you have a higher weight to this space, some of the cement companies in comparison to what the index has. Do you continue to hold on to that, or do you believe now we're reaching maybe a tipping point? Maybe you'd like to take some money off the table?
Yeah, so Nigel, one is very clearly the investment activities is clearly quite buoyant, and it will only get better from September as we move out of the rainy season. It's already there on the ground. Now, how do you participate? So you participate either through capital goods, where we have some representation in the largest conglomerate, Larsen & Toubro. Then second is cement. Cement, we believe, it will be a structural positive play. The utilization levels on an aggregate basis are low, but the demand will certainly surprise, and the larger players will disproportionately get the share. And a lot of time people look at the cement capacity utilization, but they don't look at clinker capacity utilization. And in certain pockets, there is surplus in certain pockets, but certain pockets, it is a situation where there could be some pricing power. So it's not straight up, but I think if demand growth were to be good, the larger players will benefit. And of course, again, would be at the right valuation. And that's where we have entered at the larger players at the right valuation. We'll continue to hold on. And then we, of course, participated through the logistics scheme, through a leading port, and in the digital space delivery, where we believe they will also be beneficiaries. So if the trade were to go up, the overall investment activity were to go up, we look for plays where they are reasonable in valuation. So that's where we participated through the whole bunch of investment theme that we like in our portfolios.
Sanjay, any stocks where you've booked profits either partly or completely?
Yeah, so we had a wagon company where we played the railways, the whole theme, where we saw capacity being short and demand was far outstripping it. It was a very respectable name, Jupiter Wagon, and doing quite well. And we entered quite early, and then we booked profits. We also booked profits in one of the EMS company where we bought in way early. But again, we have a discipline of our value assumption. And when your value assumption on FY21 also exceeds by 20-30%, we do book profit. So booking profits is very normal for us. But we look for secular names. But if the value exceeds far exceeds the price on 25 also, then we would certainly book profits. And that's what we have done.
Okay, so Sanjay, leave us with, let's say, the theme that's exciting you the most right now. We've spoken about a couple of them, auto ancillaries, you mentioned some of these power names as well. So for all the incremental money that you get, I think you're still sitting on 5-6% cash in the fund, if I'm not mistaken. So,
yes.
Where would you want to deploy that? Where are you looking for the most exciting opportunities?
Yeah, so, again, the domestic themes. I mean, the entire domestic theme, be it in the cement space, there are still opportunities. As I said, the utility, the power or the power ancillary, we are looking at few of them. Certain EPC companies also, if they're managing the working capital, is where we are looking and we are positive. As I said, logistics is where we are already there. So the entire domestic theme, we are very positive, and on the global themes, we are a little sanguine. Some of it is getting better on valuation, but we still believe the India growth story on the investment side, or even in the financials, which is again, a bet on consumption and investment, is what we like, and that's where we're going to be continuing. Even on the real estate piece, we have an investment which we like. And of course, telecom we like because of consolidation. So all these players, and it's generally, worked for us in the last 15 months. We've outperforming by 10% over Nifty TRI. So it's worked for us, and that's where we're going to bet even our incremental yield.
Okay, all right, Sanjay. Well, if you're outperforming, then definitely your clientele will be very, very happy. So hopefully you're going to be making a lot more money from them. But we have got a few takeaways from there. Booked out on one of those railway-related stocks, which is Jupiter Wagons, an EMS company, but you're getting a little bit more bullish on the logistics space as well. Thanks so much for joining us, Sanjay, and filling us in with your quick take on markets and how you're positioning yourself. For the time being, we'll slip into a short break, but as always, on the other side, we'll get you an insight into D-Street chatter. We'll also get in some technical calls. Stay with us. Welcome back. Well, we're holding with a gain of close to around 40 points. I'm keeping an eye out on the Nifty Financial Services Index. Since that plays out expiry and we've got just 20 minutes to go. So just keep an eye out on that index. It had a bit of a move at around 3 p.m. And now, in fact, it's gone a little bit lower in the last few minutes. But as promised, getting straight to our special segment, D-Street Chatter, Nimish is with us. He's trying to give us an insight into what he's picking up. Nimish.
Hi, Nigel. A day of consolidation, so to speak. The Nifty is trading in a very narrow range, and the Nifty is very close to that crucial resistance of 19,550. So if that gets taken out decisively, then probably you could say further short covering as well. So that's overall feedback. In terms of flows, again, a mixed day, not very large commitment coming in from the large institutions. But again, I understand there's going to be a small market at close, basket buying at a leading FID, so that can impact some individual names today. Within the broader markets, I guess the sector rotation continues. So for a change, the pharma is back in the limelight. A lot of pharma stocks are buzzing, and small profit booking as well in the metal names, which has seen a big rally in the last few days. So that's playing out. But the bigger theme seems to be the broader market. Huge moves, continues in the broader market stocks. The Nifty, the mid-cap index is up 1%. The small-cap index is up another 1.5%, and huge moves in the broader markets. But the problem is now, a lot of the mid-cap, small-cap stocks are buzzing without any big backed by fundamentals or backed by news as well. So that's a bit of a worrying sign. But, as we've been saying for the last many days, the party in the mid-cap and small-cap continues.
Okay, Nimesh, we're most excited to know about which mid-caps and small-caps have, popped up on your radar today.
Well, large part of my list today is from the mid-cap and small-cap basket, Rima. So the first on the list is Federal Mughal. We don't talk much about this stock. A big move in today's trade, up 11% last when I checked, and on volumes as well. And I guess the street is expecting some sort of a corporate development there. So that explains the move in that particular stock. So that's the first one. The second stock is Prestige Estate. Down in today's trade, but off late you've seen a bit of up move in that stock as well. But there is a clear indication that maybe a large block is coming in Prestige Estate very soon. So that's something to track there. The third stock is Praj Industries. Again, a big mover in today's trade on huge volumes as well. I guess some bit of H&I activity seems to be back in Praj Industries, and hence a big move there. And the last one is DLF. While the entire real estate basket is doing good today, DLF stands out purely on back of strong FI flow. So the delivery volumes are going to be quite high in DLF in today's trade.
Thank you very much for that. Let's invite Midesh Thakkar back on the show now. Midesh, pretty decent session, right? The Nifty is well above 19,500. The mid-caps are going strong. And this comes at a time when there is weakness in the European shores. So the last time I checked, the CAC, DAX and the FTSE were well in the red. The CAC is down 0.8%. The DAX is down over 1%. Pull up the early rates in Europe. So, Europe is firmly in the red. Despite that, we're holding up, resilient.
Yeah, that's right. And, despite the fact that the bank Nifty is also not participating, the Nifty is doing well. I think broadly, metals and IT are supporting it. And I think that will be the trend. It will be at least a move to the levels of 19,680, 700, which was the earlier figure. And if we start getting past that, then we'll look at even medium-term charts getting bullish. So hopefully, let's see. But that will be a question which we will get an answer to in the next couple of days. But for the time being, stay long. I have two BTST calls. Colgate-Palmolive is something which is moved up nicely after a few days of consolidation. So BTST here with a stop at 1974, targets of 2005. And ABFRL, that's a BTST with a stop at 228 for targets of 236.
Okay, got that, Mitesh. You take care of that throat as well. I'll catch you tomorrow with the markets. Well, we've been talking markets all this while. Let's shift focus for just a little bit and tell you about something else that's quite interesting. The upcoming ICC World Cup 2023 is all set to start from the 5th of October. The Indian team has been announced. The squad is out. K. Srinivas Rao, Group Editor, Sports Network 18, gets us the lowdown on exactly what that list is looking like.
Yes, so the Indian team for the World Cup 2023 World Cup was announced today. Ajit Agarkar, the chief selector, and Captain Rohit Sharma addressed a press conference in Sri Lanka. And, the squad is on expected lines. Was I expecting this squad? Of course, I was expecting like anyone else. Do I agree with the squad? No, I don't think I agree with the squad. Why don't I agree? I don't agree because this team has tried to, in trying to bolster the batting lineup, which I think they are like a little too concerned about. And I think to the point that they are just kind of digressing on everything else, I think in order to pack a longer batting lineup, they have missed out a trick here. I think you're going with 3 left-arm spinners, Kuldeep Yadav, Ravindra Jadeja and Akshar Patel. In between these 3, Akshar and Ravindra Jadeja come in with the same skill set. So I don't know. I really don't know what kind of variation are you going with. Who are the 3 other possibilities you could have considered? R. Ashwin, Yuzvendra Chahal or Washington Sundar, and I thought Yuzvendra Chahal doesn't fit in the scheme of things, but somehow I don't think Rohit as a captain has the kind of trust that's needed. But that aside, I think I don't see Chahal pulling off 10 overs. Between Ashwin and Washington, they could have considered. It could have been a great variation, an option that they could have gone with. But then, as I said, they have opted to go safe with 1 extra batsman. The good news is, I think I'm ready to believe in what Ajit says, seasoned man. He says that KL is looking very good. That's good news. Although, does he find a place in the playing 11 ahead of Ishan Kishan? I don't think so. Starting lineup, Ishan Kishan begins, not KL. Although Rohit said that do not deny the possibility. He doesn't deny the possibility of KL and Ishan both simultaneously finding a place in the 11. I don't know at whose cost, not at the cost of Shreyas. Shreyas needs to be the batting order. We'll go and see. Hardik is the vice captain, so he says, so I don't know where this is going to come from. All said and done, as I said, my only concern with the squad is I think we lack some variation where spin department is concerned. That said, it's a good squad. Thanks.
Thanks a lot for that, Srinivas. No big surprises, though you would have liked some changes. Ladies, what about y'all? Would you all have liked to see?
As long as the men in blue win the game, I'm happy. Whoever opens, whoever's the middle order, you go with 2 spinners or 3 pacers. I don't. As long as we win.
That's a valid point.
Whatever works.
You have 3 left-arm spinners coming in there. The variation is missing out there. Maybe an Ashwin should have got a look in. Maybe, I don't know. That could have been a dream. What about you?
Well, I don't somehow, hand on my heart, I don't think this Indian team is going to win the cup,
Rima, and I'm sure.
I hope I'm proved wrong.
And I'm sure you want to be proved wrong.
I want to be proved wrong.
And we're gunning for the men in blue, and we're going to win this World Cup.
Yeah, it's at home this time, and it's been a long 10-year wait. When was the last time? 2013? Yeah, exactly. It's been a long 10-year wait. So we're all hoping the men in blue, irrespective of who's playing in the final 11 out of the 15, we make it this time. Srinivas, thank you very much for joining in. Get into a break. On the other side, we'll be joined by Jay Bala of CashTheChaos.com. Stay tuned. A big mover today is Jubilant Foodworks, and in case you're trying to wonder what's fueling the rally, let me go across to Mangalam Malu, who could provide some sense into the gains today. Mangalam.
Well, a bunch of reasons why Jubilant Foodworks could be moving higher in today's trading session. So I tried to narrow it down to a couple of them that look most intuitive to me. The first one, of course, is that we're ending Shravan, and this Shravan was a long one because there was Adhik Maas as well. So not a lot of people would consume a lot of meat during these periods. So now that this ends, the belief is that maybe there will be higher ordering as well. And just as there was a discussion on the World Cup squad for India. We're about a month away from the ODI Cricket World Cup. And what usually happens in these sporting events is that people feel hungry while watching the games as well, and they tend to order more pizza. So that is another reason for people to believe that maybe sales would look good, especially in the quarter after the second quarter. But finally, we are also looking at some moderation in dairy and cheese prices as the flush season is underway, and that would support costs for the company as well. The most important reason, according to me, however, is the underperformance of the stock. We've been talking about the mid-cap index hitting a fresh record high on a daily basis, right? This year itself, the mid-cap index is up 28%. Compared to that, including today's move, Jubilant Foodworks is up just around 5%. And why is the mid-cap index? If you just take a look at the entire QSR space, Jubilant Foodworks has been a big underperformer. Restaurant Brands is up 7%. Sapphire, Devyani, Westlife has been a big outperformer with a gain of 21% itself. And the Q1 results weren't particularly bad. The management said that they are focusing on the loyalty program, value offering in terms of 49 and 99 rupee price points and quicker delivery. They've also looked at revamping their dine-in experience, and margins, they did say after their first quarter, should at least stay stable or improve from here on itself. For all of this underperformance, the stock at one point, which was trading upwards of 75 times 2-year forward earnings, is trading just around 54 times. Not particularly cheap, but definitely a lot cheaper than what it was in the past.
Okay, got that, Mangalam. Thanks very much indeed. Zomato has been quite a bit of the undoing that we've seen on Jubilant Foodworks, perhaps. A big
the question is, he said World Cup is coming, right? Are you going to be eating pizzas or burgers, right? So because burgers were doing well.
The traditional wisdom is, in general, you order more on the QSR side when a match is on or a game is on. But I don't know, I mean, given the options and the opportunities here, I think we're spoiled for choice.
Why eat?
One, you can eat order both.
No, I think Surbi's got it. That's the few.
That's only for weekend games. Otherwise, just stick to the basics. But
let's move on from Hunger Games to Jay Bala of cashthechaos.com. Jay, afternoon, and thanks so much for joining in. What have you made of this relentless one-way supernormal rally that we've seen in the mid and the small cap space?
Yeah, I think it's about to come to an end. It's reaching an exhaustion point. The price turn hasn't come yet, but pretty soon. The small cap rally is pretty stretched, so is the mid cap. So, the trigger for the turn is probably going to come from the global markets. I think this week is going to be a pretty pivotal move for the US equity markets. I think we're going to see the beginning of a sharp sell-off. So that'll probably contribute to global sentiments. So we'll see the end of the small cap rally pretty soon.
We'll see the end of the mid-cap, small-cap rally. Okay, that's interesting. Jay, you want to expand on that? What are the chart clues that you're picking up that are giving way to caution? Because I think if I got some of your notes correct, it seems that you're expecting the market to start heading towards the lower side of the Nifty trading range. Is that right?
Yeah, that's right. So if you recall our August 2nd interaction, and I had mentioned that, the Nifty is set for a short-term pullback into the region of 2022 levels. That's about 18,700 to 18,400. From a very extreme short-term perspective, the markets could bump up somewhere close to 19,620 to 19,700. So, once that's done, I think the next stage of a short-term decline is set to come. I'm working with the thesis that we're going to drop into the 2022 zone and then head back to the fresh record high levels. But, we're going to see some short-term, at least a short-term shock for the market.
Okay, all right. Hi, Jay. What about individual stocks? I believe you have a bullish view on a couple of stocks and a bearish. So give us one call of each.
Apologies. So basically, if you recall, I was bullish on the pharma space and I was waiting for a short-term pullback towards the 15,000 level on the pharma index. And the pharma index have done that. And Dr. Lal Path looks ideally placed for the next leg of our move. But we need to be a little bit cautious and wait for confirmation to come from the market itself. So I'm looking for a lal path to cross 2263. Once that's done, that will be a confirmation that we have seen a short-term bottom, and we could see fresh 52-week highs close to somewhere about say 2550 to 2600. And the negative view is on Container Corp. It's a medium-term negative too. But once again, since we are at a crossroads, we want to see the markets break below 670 on Container Corp. That will be a confirmation that it's done the short-term up move. Once 670 is broken, I'm expecting a move somewhere towards 550. But for that, I would also like to see a break of 646.
Jay, out of time. Thank you very much for joining in. That's the call coming in from Jay. He believes the end of the Nifty and the Nifty mid-cap and the small-cap rally is in sight. The U.S. markets could be starting a period of sell-off. Quickly, let's run you through. The Nifty is going to end at 19,581, a neat 50-point up move. The sensex higher by close to about 100 points. Mid-caps continue. 40,000 is the level scaled by the mid-cap index, and the small-cap index moving in step. But despite that, the advanced decline ratio, though in favor of the gaining side, it's not that you have a big gap between the two. You've got about 1,600 stocks in the green or gaining versus about 1,300 in the red. The top gainers include from the pharma pack, Apollo Hospital, Sun Pharma. You've got Torrent Pharma also rising close to about 2.5%. ITC, Titan saw some buying. Strength in L&T, Nestle, Infosys also fairly steady. On the losing side, Dr. Reddy's under pressure, 1.5% down. Weakness in Maruti, Eicher Motors, and banks per se continue to underperform, with HDFC Bank, State Bank of India weak in trade.
Okay, if I talk about some more moves and shakers from the mid-cap market, check out something like an Ashoka Buildcon as we're closing out for the day. Big move on that stock on big volumes as well. Almost an 11% rally as we're shutting shop for the day. Of course, IRFC is a stock that we've discussed. Jubilant and Devyani, some of these QSR plays ending the day in style with gain of about 6 to 7%. Then you have something like an AB Fashion and Retail also up and about. And finally, let's not forget the PSU banks, Central Bank of India, UCO Bank, anywhere between 3, 4, 5% on these stocks. So it's really been up and away for the mid-cap market. But overall, a very range-bound, Nigel, index level.
Well, that's right. But a few stocks hit upper circuit. MMTC, you had JMR, the other one that went higher for the second day running. You had Dish TV, MMPC, you have Sadla Performance, and some of these stocks, the volumes are very high, so we're just highlighting them. Precision Camshaft, just take a look at that stock. It was up close to around 15% today. Cyan, DLM, STC, a whole host of names. We were talking about only stocks that were up between 15 to around 20%. That's the sort of market you had. The headline index moved mildly higher, but you're really missing out if you've not participated in the broader markets. Some calls for caution, but let's see how this one goes. For the time being, though, we'll have to wrap up on this edition of Closing Bell. You don't go anywhere. Our Tuesday special Commodity Champions comes up next.